Hello, everybody. This is Noah and John, and we are back from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, you're looking refreshed. You were away. How was your vacation?
I was away.
It was good?
I was nice. It was skiing. How were you? You were in the sun.
I am feeling good. I am refreshed. Key Largo, a little Florida will do it for you. Shout out to Abby's Juice Bar. Thank you so much for giving me the juice to get me through and get the energy back. John, I'm ready. Let's do Manhattan real estate. I'm looking at supply 61.35. We're over the six handle. Show me that chart.
Yeah, 61.35. So we are, as you said, back over the six handle. And that's interesting, Noah, because that's a 2% or so increase from the week before. And now we're over 6,000. We're starting to get kind of back in the realm of what for the last few years has been normal supply. And it's going to be interesting to see. And of course, this is actively listed supply. So there's still another 1,000 or so units that are out there that are not necessarily updated or so. So supply is finally getting back to a place where you can take a breath and say, oh, okay, there's some units out there.
Yeah, and I got to tell you, a few months ago, I was thinking that we reached supply around 6,000 out around this time. We talked about it in January, February. That was around the threshold that we thought it would reach before it comes down. There is an entirely different macro setup right now than 3 months ago. When I look forward right now, I am seeing a different set of forces than when I looked forward 3 months ago. So that is something we're going to have to talk deeper about. I am not doing about that here. Let's move on to the weekly Manhattan update. Pending sale, Manhattan's measure of demand, 46.27. Johnny, show me that chart.
Yeah, so that's also a 2% upturn, I suppose. So you have supply up 2.5%, and you got pending sales just matching it again, 2%. So really, it's neck and neck in terms of supply and demand on the overall level here, Noah. And it's going to be interesting as we progress into this busy season to see which one of these starts breaking down first. And I don't know what the answer there is.
Yeah, let me just explain what Johnny's saying here. Supply is moving fast like this. Pending sales is moving up, but not at nearly at the pace of supply. Which one of these guys is going to break that trend first? I don't know, John. Given all the things that are going on right now, and I could think of some FOMO, some fear of missing out buyers right now, locking in rates. I think that there is a demand pull situation happening right now that nobody is talking about. Okay. So in my opinion, I think pending sales is going to break first, because I think right now there's a lot of buyers from future months that have pulled forward their decision to purchase and lock in rates in the last couple of months. Now the rates are going up, and that when we get to those future months, that demand is not going to be there because we're pulling it forward. That's just a theory I have. It's a feeling. It's a gut. I have no idea if it's going to play out, but let's see. Johnny, thank you very much. Let's go over to the weeklies. I'm looking at the Manhattan supply, 555 things. That's healthy. Show me that chart.
Yeah, 555 is a strong number for supply. It's kind of what we've been looking for. All these weeks coming in over 500 are just kind of what the market needs, because we've been talking about this lack of supply for a while, and it has been. Well, let's pause for a second. Supply has been coming into this market at a very good pace. However, the demand side has been so strong that it needs more supply. So even though supply has been running over average, we just needed more of it. And so another week of 555 is great. That's almost 10% higher than it was a week ago, which is sort of a quiet week. But listen, we're back in it. We are hitting the busy season with what is to be expected. So that's a good sign.
Yeah, and I'm just curious whether or not we sustain that going into May and June and July, which we know supposedly it's supposed to start going down. All right, so will it go down? And if it doesn't go down, we have to have another story. That's why I think supply might continue to go up a little faster than pending sales. We'll see. Johnny, let's go over to the measure of contracts signed. 1 week, 330 things got signed into contract. Wonderful week. Show me that chart.
Yeah, it's great. Now, so here's kind of where I think there's a bit of a disconnect. So we've got supply increasing sort of at typical normal busy levels. Demand is doing the same thing. However, if you look at demand on sort of a year-over-year basis, we're actually down a little bit than where we were last April, Noah. So when you think about, all right, supply is coming on hot and heavy, demand is too, but it's not really at that pace. So I don't necessarily think that we're going to see a return of a huge amount of supply and a low number of contract signs. I think that the contract signed level is going to kind of start normalizing a little bit faster than the supply side. And I think that's going to lead to, I'm hoping, a healthier market toward the end of this busy season into the summer.
Yeah, and let's not forget where we came from, Johnny. I mean, we did a hell of a recovery, and you're right. Last year at this time, we were doing crazy amount of contracts. All right, and if I just look at my ticker and I transfer to the 1 month, and I look at contracts signed right now, a 30-day period over the 1 month, that's 1,478. 1,478. This time last year, we were approaching 1,800. So that's what your chart was showing. That was the cray that was going on last year. We are high Like the normal right now is around 1100. So we're still well above where we're supposed to be. We're just lower than where we were last year. And that's what we're talking about here. So thank you for bringing that up. Let's now move over to the chart du jour, Johnny. Let's take a look at the Manhattan resale square foot trends. Now, this is going to be this is going to be condo and co-op, right? This is the whole market. We're going to start out with the whole market. And John, you laid out a beautiful little channel here, and you can see the move that we made. Let me just show you guys what I'm talking about here. Look at this recovery. Okay, look at this recovery. Nothing goes in a straight line. So you had a one move over here, and then you had a little thing over here, a little down over here, and now you go up, right? That's exactly how markets work. And here we are right at the top. And this is the kind of fade that we think is going to start to happen over time. Johnny, what do you think?
Yeah, I agree with you. I mean, I here's the deal. So this is contract signed. So it's really difficult to get a look at, like, this stops at what, January? We're not looking at February. We're not looking at March. We're not looking at April yet, because it takes a while for those. We're looking at sales price. So it takes a while for those to filter through. Accuracy's got to print it before we actually qualify it as an actual sale. We don't look at, there's just the, the close status. We look at actual verified sales. So when you get an early look at where these contract signs are coming in, the ones that are not here, they're well above that line. So it's going to be interesting to see, like, well, is the luxury market still strong? And if so, it's going to be pushing this line higher. If not, we could stay within this channel. But honestly, no, I think for the health of this market, for the overall sense of this market, you want to stay in the channel. You don't want to be too far above it, because that's really going to put a stop to the buyers. Because, as we've said before, the best cure for high prices is high prices, and that's going to stop buyers in their tracks. So it looks like Manhattan is back on trend, back on its long-term trend, and I think that's a good thing going forward.
Yeah, and you know what? I like to look at channels. Take a look at this period between what is this? This is mid 2011 and 2015, guys. This is a 4-year period that I just drew a channel for. And I want you to see, we all know what the market did. The market rose during this time, right? Look at what this chart, I mean, look at what it does. Nothing goes in a straight line forever. It zigzags up and down. But over this period, the market appreciated probably somewhere around 25, 30% or something in those 4 years of time, right? Now, when I look forward, I don't know if we're going to appreciate 30%. All right, I don't know about that. But when I look forward, I think we're going to have a similar kind of a trajectory when I look at the channel going forward. And I think right now we're kind of at that top part. So again, I want to just prepare the agents. It's not going to be uncommon for this to fall a little bit and then to go up and down in this channel, but you're in a general rising price channel. So I want to bring that up. And now I want to pivot, and let's break this down, Johnny, really quickly. I know we're running out of time. Under 2 million and over 2 million. Here is the over 2 million sector, guys. All right, I want you to focus on the colors. The blue is everything, okay? The red is your condo market. The yellow is your co-op market. And take a look at what the higher end price points, look at the slope, guys. Look at the slope of the last couple of year and a half. Like, look at this. This is what you want to look at. Look at that recovery. Quite a good recovery. Totally normal if we fade a little bit from here. Johnny?
Yeah, I would agree. I mean, that slope to me looks like the steepest slope we've seen in quite a while. I mean, excluding the craziness of 2008, which, if anyone remembers, that market was just bonkers. So, or I guess 2007 and 2008, right before the credit crisis. So it's a pretty steep slope over a short amount of time. So I think you're right. No, I wouldn't be surprised rather to see a little bit of fade here going forward. But it seems like there's a new trend in place. So yes, we might come off these highs, but there's some support here going forward to sort of, keep this market on an upward trajectory.
Yeah, exactly. I would agree with that. The only forces that are changing a little bit is the interest rate exposure and all of the derivative volatility that comes from that, which has just begun. We have just begun that whole leg, so we don't know what's going to happen there. Take a look, John, and we're going to finish right here. This is the lower end. This is the lower end. The red line is the condo market. The yellow line is the co-op market. And the blue line is going to be both of them together. Do you notice the slope? Look at the slope of that recovery. It has not been anywhere near what that higher end. And that's the whole point that I want to get through to the audience today. The lower end in Manhattan has not done what the higher end has done in this recovery. This has been not a recovery of small units, recovery of larger units. So if you are in that 2 million and under sector, and you have this impression, oh, inventory's low, demand's high, let me just price this like it's 2015 and 16. You're going to get a false, misleading read on the market. And you're probably going to just have a stale listing where there's no activity. So price it right. Understand it's a liquid market. There is a bid. And that's it. The market will do itself. Johnny, final thoughts.
No, I completely concur. Because if you go back to the over 2 million chart, I mean, you're looking at prices that are at or above their peak prices. If you look at this,
Yeah.
the under 2 million chart, right? Where are we? If you just draw that line back, I mean, we're at 2018, 2017
Yeah.
prices. We're
Yeah.
not quite there. Now, bear in mind
Yeah.
that this chart has a lot of upward pressure, right? It does not include sales that are over $2 million. So you're not necessarily going to
Right.
get that. They don't have the freedom to run. So it's going to be bound up there. But still,
Yes.
looking at this, we're not at record prices yet. There is recovery. It is a nice gentle slope up, which I think is exactly what you want to have.
Yes.
If you're transacting in this market. If you're a buyer in this market, you don't have to feel like you got to immediately chase something. You have a chance for sellers to kind of come out, negotiate. I think that's a good sign.
Yeah. Very good stuff here, Johnny. Oh, God, I missed you. Thank you so much for building up all these charts. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. If you guys got questions, we got answers. Please visit our forum right down over here. And if you want any of the reports that Johnny whipped up today, it's going to be right over here in just a few minutes. Other than that, this has been your weekly Manhattan market update. Catch you next time.